In India, I would like to share one interesting development, very wide use of fintech. This is under the mutual funds category. We have given regulatory incentive for launching of the products with less cost, what we call direct plans of mutual funds. There are two kind of, in a mutual fund scheme, there can be broadly two kind of plans. One where the distributor fees is embedded, that's costly, a bit costly. One, we have provided a provision where you can cut out the distributor cost, and that is called direct plan. So there it is expected to be anything around 100 basis points cheaper, these kind of products. So these we are trying to pitch to the retail investors, where the mutual fund industry, their tendency is to rely more on the distributors, getting the products through distributors, but the regulators want that more of the direct plans should be promoted, and there we have the category of we have started to register financial advisors. So we are having generation of financial investors or new investors. They are using platforms. And they are telling, because nobody wants to, in India or in any emerging country, the retail customers don't want to pay to a typical advisor. These advisors who are offering this platform services, they are come and join us using fintech for customer onboarding. They are kind of charging some flat fee, or some threshold is there. So they are giving advice, and they are allowing them to freely transact into these direct plans offered by the mutual funds. So this is emerging as a very exciting kind of thing. It will promote financial inclusion in the capital market. So this I wanted to share with the audience here. Thank you. Companies like Paytm, so many financial advisors. In fact, in my office, I have given license to this kind of advisor, and they are doing great business.
To supplement this, how this fintech will reduce the cost or the fees for the investors? So basically, they do not want to pay more if the technology comes. So it will facilitate their transactions and others, but not at a higher cost. So how, Jackson, can you just suggest something where the less cost the products can be sold, or the retailers or the investors can be benefited?
So I don't know the exact answer to that question, but I will tell you that we have read a few studies now that focus on the unit cost of financial intermediation in financial services, and what's been amazing is that the study that we usually refer to focused on 130 years of financial intermediation in the U.S., right? The unit cost of financial intermediation, on average, over the 130 years, has not fallen, right? Despite all the innovations and everything that's going on out there in the financial services space. And this was just a U.S.-based study, but there were similar studies with similar conclusions. So despite all the technological advancements and that sort of thing, that hasn't fallen to the end user, whether it be an investor, whether it be just a retail consumer, in terms of cost-effective products and the ability to actually get engaged formally with the financial services system. So that is very worrying to us, and I think a lot of the fintech in this era of innovation, they talk about financial inclusion and empowerment and that sort of thing, and I love it. I think that's a great tagline to have, right? But we're still questioning whether this era of fintech is actually going to lead to that drop in the unit cost of financial intermediation. So I think that's still an open-ended question at this point. And I know that wasn't a direct answer to your question, but just wanted to throw that out there.
Alex, yeah. I would just, I would say, to the extent that costs are reduced, I mean, it's probably in the ways you would expect, which is using new acquisition channels. So fewer brick and mortar locations for getting getting customers off the street to come in, but using new digital channels or non-traditional channels for acquisition where the cost is substantially lower. I think second is on the cost of service. Servicing customers, to the extent that you have certain fee structures in place, that creates less incentive for innovation in actually the cost of providing services. So whether that's coming up with new digital agents that can use AI, right, to provide recommendations on products and things like that, but it's basically removing a lot of human costs from the back office servicing of existing customers. And then the last thing I'll say is, it's looking for new kinds of revenue models, whether that can be creating referrals, so cross-selling customers, subsidizing the price of the core product and then referring customers out, or through monetizing the data that's created based on more of the digital footprints for the acquisition and servicing.
Oh, there's one there, and then we'll do one here in the front.
Okay, thank you. My name is Olero from Ethiopia. Let's say when we are using future market or forward market, which one is more effective to be used with or related with fintech? Thank you.
Sorry, I want to make sure I understood the question. You're asking us between an informal forward market, is that what you're saying, versus a kind of a regulated futures market? Was that the question?
Yeah, both. So the forward market or the future market, which one would be more effective to apply fintech to?
Yeah.
Is that right, Olero?
Yeah, I mean, look, I'll take a crack at that. I don't know that I would necessarily distinguish, right? There's just different types of technologies that would be applied to different markets and processes. A lot of these technologies are about kind of the core operating infrastructure of a marketplace. So certainly you can think about, as I mentioned in my talk earlier, how certain types of interoperable databases and systems could perhaps bring efficiencies to regulated marketplaces and exchanges. But that being said, there are a lot of more kind of informal markets where you're also seeing DLT type systems assist with trade finance, help with the tracking of delivery of products. So if you think about it as middle office and back office infrastructure, I think that cuts across. I mean, that cuts across financial markets into other areas of economic activity too. So hard to say specifically where does it apply more. The answer there is remains to be seen. I think there are applications that you might see of these computing technologies kind of across the economic spectrum.
Which kind of developments in the pipeline would you highlight as relevant product being brought to the market in the next few years?
Yeah, just to clarify, I mean, so are you asking what are the more promising areas of?
Actual project that you could mention, because as yourself said, lots of what's relevant in fintech is still in production. So I would like to know in the pipeline what's coming next that is relevant as a product, actual product for the market.
So Chris, can we turn to you and maybe a couple of at least the projects that are underway that you're aware of?
Yeah, absolutely. I think some of the more interesting projects out there, again, these are in some ways high stakes projects, and they're either going to do phenomenally well or fail miserably, but we will see them come online in the next couple of years. And these are decentralized web applications that use tokens to incentivize different participants. So I think probably maybe one of the most well-known examples is Filecoin, which is a project of Protocol Labs, and this is not direct innovation to existing financial services, but this is something new, and it's a new token that will be out there and will incentivize everyday users to be part of the network, to contribute essentially storage capacity to the network, and then also be able to store their own files in a decentralized way. So you don't go to iCloud or if you're a larger company, Amazon Web Services, you can you can do this in a way that's decentralized. So it means that globally people will have better access, faster access to their files. It also means globally that anybody who has an extra hard drive can earn tokens. And when we have things like that out there, that's going to disrupt a lot of models that we see today. And it's going to change the economic incentives for participants. And it's also going to create the need to have strong marketplaces in order to acquire the tokens to participate or sell the tokens if you've created money. So it's going to maybe not change the way we do a lot of things today, but it's going to bring some new, the need for some additional services online in order to facilitate that project.
I would just touch on a couple others that I mentioned already, but I think the open banking, this whole, and it's not just banks, but how do financial institutions interact with all of the consumers and businesses that they connect with? I think traditionally a lot of core software has been very closed, not very many ways to get data in and out. You have screen scrapers and other data aggregators that have been trying to solve this problem, but I think that that there will be increasingly new models created around opening up access there, and that opens up a whole lot of new possibilities. And then an area we've been focused on a lot, KYC, AML. I think with the arrival of all the the data on consumers and across the world and businesses, it's been a lot harder for governments to keep up with the kinds of financial crime that are taking place. So I think there'll be a lot of breakthroughs there over the next 5 years.
Great. Well, thank you. And I see that we're flashing zeros in the back, so we've run out of time. But please join me in thanking our panelists.
Thank you all very much. I mean, it was real insightful. And we should have you back next year and let's see what actually happened, what didn't, right? So why don't we take a 10-minute break and then we'll get started, and it'll be the last session.